Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. I'm starting this week's report looking at the VIX because it's how we ended last week's report, and there's some important signals that you need to know about before we go and look at the rest of the markets. First, let me just point out here this support level, this horizontal line right at the very bottom, was a 3-year low support that I brought to your attention last week. And this week we formed a hammer pattern right there, right on the support level. So when the VIX is on a 3-year low, that becomes very bearish because, as I've mentioned before, the VIX is a contrarian indicator to the S&P. So if we're bullish on the VIX, like we see here with that hammer pattern, then we're most likely going to be bearish on the S&P. And I'll be analyzing those markets here in another minute or two. But this line is what I drew last week, and you can see that we're starting to pivot in this very same angle that I drew that trend line. So I'm going to leave that in place for next week, as I expect the VIX to climb at this particular pace and then eventually reach resistance up here. We'll have to see whether or not we break through resistance, because that would be extremely bearish for the markets. Remember, it's a contrarian indicator. But if we pull back, then we'll know how to adjust our positions, and we'll use the VIX as a leading indicator so that we can monitor that on a watch list. Okay, let's take a look at the S&P ETF, that's SPY, also known as the spiders. And I've left my support and resistance lines in place. Last week I drew this as role reversal support. This was the resistance line that I drew. We're still under that resistance, but the key signal that I want to point out here is that the S&P formed a bearish engulfing pattern right here. And that's very important, because not only is the bearish engulfing pattern formed at a resistance area, but we still have gaps below the market that will act as a magnet to draw the price action lower. So this becomes very bearish, because the bearish engulfing pattern is accurate about 80% of the time, like the bullish engulfing pattern and many other signals. We got that 80-20 rule. So there's an 80% chance that we're going to drop to retest support. So I'm going to leave this line just like that as my forecast for next week. And of course, next week we'll look to see whether or not the markets followed that short-term trend line. And I think it very well could, because the percentage of accuracy here is top-notch all the way. In fact, I was talking to a good friend of mine, John, and his wife, Colleen, at dinner today, and we talked about charts, and I talked about forecasting price action. He is a pilot like me, so I used pilot language to explain to him the importance of volume. And I told him, you know, if a plane is increasing in altitude and the volume, let's say the volume represents the throttle, if the angle of the plane is heading up, but you start pulling back on the throttle, that's a sure signal that we're going to start to drop, because volume is a leading indicator. And look what happened on Thursday right here. Although the price was still green candles for 3 days in a row, look what happened right there. The volume dropped. And then today we see that bearish engulfing pattern on increased volume. So what does that mean? That's a sell signal, and the sellers are now giving it the throttle. So the sellers are accelerating into this pivot point here, and that's why I'm more concerned about people not using stops at this particular level, because this is a time you need to be protecting your account. If we look at the diamonds, that's ticker symbol DIA. It's the ETF for the Dow Jones Industrial Average. You'll see we stopped right at, look at that, right at the resistance point that I drew from last week, and yet another bearish engulfing pattern. Let me zoom in here. So again, you could see that yesterday, and I'm talking Thursday now, we had the green candle, but it was on 30% less volume. Right? Lightening up on the gas right there. We're going to stall, and now the sellers are moving in with force. Very, very important that you keep things simple and look at the signals, analyze price and volume first and foremost, and then throw in the gaps and throw some other angles in there as well. Right here, I'm going to draw this as a forecast for next week. I think we'll pull back, and I think that on Monday the volume could very well increase because the sellers are picking up their momentum here. So watch for higher volume on the way down, and that will accelerate the downward move. Now let's take a look at the Qs. QQQ, that's a Nasdaq market basically. It's called the power shares. And like the other markets that we talked about, here too, a bearish engulfing pattern right there at resistance. Now remember, those lines were drawn last week. Resistance was drawn last week. Support was drawn last week. I think that what we're going to see, because of that bearish engulfing pattern, I think we're going to see a move back to fill, or at least attempt to fill, that gap. Again, look at the volume. The consistency here is absolutely incredible. Look, green candle, green candle, green candle, green candle on higher volume. So that's the trend accelerating to higher levels. And then again, Thursday, big drop in volume. Buyers are stalling. Sellers are now moving in with force. Again, very bearish, especially when it's at a resistance point. Now, I'm not talking about having the whole market collapse here next week. I'm talking about a respectable pullback to fill that gap right there. I'm circling that, and I'm going to give you some resources here towards the end so you can study more about gaps, hammer patterns, and engulfing patterns as well. Now finally, let's look at a more broad-based index. That's the Russell 2000. That's ticker symbol RUT. And you'll see that we stopped right at resistance. On Wednesday, we tried to break through that, but it failed to hold over that resistance, and now we're starting to pull back. What I'm going to do is adjust that right now. I'm going to remove that drawing, and I'm going to redraw the resistance from that high. That's what I'm going to do. Just take the most recent high. I'll erase this right here. Remove that drawing. This is a former downward trend. I'm going to remove that to clean up the chart, and I'm going to forecast that we're probably going to break down below that low right there. So keep an eye on that. The Russell 2000 on this chart does not show volume, so we'll have to look at the other indices and monitor that. But really, keep your eyes focused on the simple things. Watch for volume, watch for engulfing patterns, learn about technical analysis, and you'll surely increase the probability of making money moving forward. If you'd like to learn more about some of the things I've discussed, just go to themarketguys.com, click on the video tab right there. You'll see that as you scroll down, there's lots of different things that you could learn about. And in fact, the gap is one that I mentioned right there. The role reversal is one that I mentioned right there. You'll see that the engulfing patterns are down here, along with hammers and dojis. These are all things that I've mentioned. So this is a library of videos that are given to you for free so that you can enhance your knowledge base and really get to know this like the back of your hand. Once you get comfortable with technical analysis, you'll see this gets to be a lot of fun because your percentage of accuracy will also go up. Again, this is AJ Monty with The Market Guys. Thanks for joining. So long.
For almost 3 decades, AJ Monty has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep it super simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. AJ is a best-selling author of 2 books, The Market Guy's 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. AJ will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is AJ Monty, Chief Market Strategist for The Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with two questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our trade alert services help answer these two questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have two services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out or when a trade goes against you, when should I take my loss. The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for The Market Guys. Thanks for watching.
Enrolling in this service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guys 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you have taken the first step in the right direction. We look forward to having you as our newest member.